All right, guys, what's going on? What's good? What's good? It is the FOMC date, you know what I'm saying? It's gonna be probably a wild ride today. You guys ready for it or what? Are you ready for Powell to come in here and, you know, that be the excuse for everything to get yoinked? You guys ready for that? That'll be in about 55 minutes, give or take. And the chat is open for everybody today. All subscribers, at least. What's good, Naruto, Cameron, Primer League, Willow, Sean, Eric, what's good, man? Who else we got? 2020, Big James, Maximiliano, Leon, Marshall, Smiley, Willow, Baby Pips is ready for the craziness. Nice. What's good, Hermita, Ibraneth, Fernando, C Trades. Honestly, I don't know what to expect. Let's go to a 5-minute of the indices, actually. It was clear and obvious to everybody that I wanted higher pricing for Nasdaq this week. We did not get that. So, you know, well, if it's not going to go higher, then it's been going lower. And with what we have today, I think the Nasdaq is dirt. I think it's absolute dirt. In an environment like this, FOMC, it's going to be a lot more difficult, okay? Now, if you look at, let's say ES for a minute, I think there was a great setup early this morning, and I didn't get in the charts in time. I didn't get to the charts in time is what I meant by that. There was one really nice setup that S&P had, in my opinion, right? Where we swept a short-term low, and this is why I tweeted earlier and said when liquidity gets taken, what does it do? You know, after that kind of thing, right? So we have that low, high, lower low. We trade through that, and we get into this down candle here, or excuse me, this up candle here, and we rally for these equal highs. And that's what I wanted to do, and I hesitated right at the last minute. So we hit that down candle here beautifully at 720, 730. I was up at this point, but I was like, you know what? Listen, I don't know about you guys, but when I first wake up, bro, I am not at normal IQ. When you wake up that first 5-10 minutes, you are not the smartest person. You understand what I'm saying? Like, you got to wake up. You gotta give it a few minutes, right? Let the blood flow through your body, whatnot. So unfortunately, I missed that, and that would have been probably about 8 points or so on this right here, and that would have been beautiful. Everything since then has been fucking horrendous, and this is what I mean. This is like the type of shit I was looking at earlier. So S&P leaves behind equal lows. We trade higher. We take a short-term high. Wonderful. We leave that with an imbalance. Wonderful. Right? So I'm thinking, all right, cool. I'm going to short that down to those lows. We end up taking those lows instead. Okay. Pull the order then. I'm done with that. So it hits this imbalance, completely trades through it, doesn't go to the high. Okay, now I'm going to go back down, right, to basically sweep more of those lows, but I'm also going to create a higher time frame set of lows. Bro. What do you do with that, right? So to me, it's just like, it's closing above potentially bearish imbalances and still going lower instead. This whole time, Dow is like, you know, screw you guys. I'm just going to keep printing higher and higher. Okay. So Dow continuously trading higher, and that is entirely against Nasdaq, who traded higher, went lower, makes a lower high, lower low, lower high, low, like, ugh. It's been gross today. You know what I mean? And like, I probably set a world record for the number of break-even trades ever taken in a day. You understand? So it's like when you miss that setup, you know you should have taken. Everything else after that is dirt. Right? It's like the market's giving you a middle finger. Like, yeah, you should have took that trade, but you did it. And now you're going to be punished. Now you're done. So that's how I feel. I don't know about you, chat, but that's how I feel today. Was good, Charlie? Was good, Yinka? What makes you enter on one imbalance / other entry forms instead of the other? That's a great question, and I'll answer that in a brief moment. Do you study currencies like you do with stocks? Yeah. Currencies today are pretty screwed up too. Everything's screwed up until FOMC. Drop a like on a stream for me if you would. The button doesn't work. I haven't fixed that yet. I'm going to probably throw the stream deck in the lake. And hopefully not hit one of the ducks out there. There's a lot of ducks outside my house. They too are trying to get this bread, you understand? So whenever they clear out, this fucking stream deck's going in the lake. Shorted ES on that 5-minute imbalance and inversion. Very nice, Jeff. On this one? Or this one up here? You shorted this? I mean, you definitely did well. You probably cleared like at least 10 points on that. Maybe 8 to 10 points. I don't know what your TP was there. But great job. Great job. Was good, Stephanie? Bearish on euro. I think that kind of goes in alignment with higher time frame dollar, but I still think FOMC is going to ramp things up pretty heavily today. Do you trade in your dreams too? Now, so I forgot to tell you guys last week, and it was the day I shorted one of the, I think it might have been the night I shorted the euro. Okay. Or the indices. I don't know. But either way, I shorted the market the next day. But let me tell you what actually happened. So I'm in my dream, okay? It's not a very long dream. It's very quick. And you know how dreams are weird, right? So I pull up in my car. The very first car that I had, which has been long gone. It's an old black car, no tinted windows. It was my dad's car that he passed on to me, you know, when I was, I think, 16 or 17. You know, first car is like a hand-me-down, right? It is a piece of junk. But anyway, in the dream, I'm driving that car. I pull up to the gas station, and I'm pumping gas in it. And I pumped way too much gas. And when I went to start the car exploded. And I woke up. And I thought to myself, what is that all about? Shorted the euro, made money. So, what do you do with that? I don't know. But I don't trade in my dreams. I've had dreams where I only did this like once or twice, where I dreamed about a stock and the price that it was at in my dream was the closing price the very next day. It was weird. It was weird. But I never did that again. Yeah, Stephanie, I I try not to feed the ducks anymore because they shit everywhere. And I don't want to deal with that. So you see how we have these lows here on Nasdaq? They're kind of wide, right? And that was swept. So ES is kind of having that same phenomenon where we have like a wider formation of lows. And then again, as mentioned, Dow is just like, nope, screw you guys. I'm just going to keep going higher. So I definitely think there is a buildup of liquidity in the 40s for ES. And this is purely based off of small time frame. And that's if we don't sweep this before FOMC. But Yinka, so let me show you this. Since I took some trades today and broke even on all of them, I switched over to what's it called? Paper after that, demo account. Because right at the beginning of lunch, I saw this candle here. And like I just said, right? We took London's low, I'm assuming. And we took both of those right here. Okay. So once we did that and then closed, that next candle, I'm looking for longs. That is the next candle entry. That can be a model where you're basically longing the next candle. Now, that model really just requires the open and then either buying below it or just straight up buying as soon as the candle opens. Or, you know, if you're smart, which I would hope you want to be, you can go into a smaller time frame and go, okay, here's 1105, 1106. So that next 5-minute candle, we trade down and into what? An imbalance right there. Simple. That's tradable to me. There's nothing too fancy about that. Just an imbalance after a run on liquidity. We hit a 420 level as well. I know Willow's writing that one down. 17,420. Okay, 420 levels, they fucking work. I despise whatever you believe. Shit works. Whoop. We trade higher. So, were we going to get a continuation to go up here? That's what I was looking for. And the market said, yeah, fuck that. It went lower. So the idea on a normal day, this would have smacked. On a normal day, this would have absolutely smacked. Days like today, it's FOMC, and this is lunch as well. You can expect some shaky. Okay, you can expect some shake and bake. Now, what else would give me a little bit more confidence here? Well, look, take a look. What else do you think? What else do you think? Let's look at the run prior. That's always going to be important, okay? That's always going to be important. The run prior. What has happened here? Well, quite a lot. This imbalance, we traded into that. We traded lower, small imbalance right here. Traded lower. What do we have here? Big James getting ahead of everybody. Getting ahead of me. Damn it. Let me teach, Big James. Let me teach. Would you expect NFP weak, low probability conditions in price? No. If anything, I'm gonna look for trades after. I'm gonna look for trades afterward. Probably not before though. So you have this right here. Okay. So that could be an imbalance, right? Does the market respect that imbalance there for a couple of seconds? It's a 1 minute time frame. So it hits that, trades off of it a little bit. So it saw some level of sensitivity. Not a lot, but it saw some level of sensitivity, right? So how far could we expect price to trade into this imbalance? Oh shit, John. Inverted imbalance. And it overlaps. See how they both overlap? This one and the gray box. You see how they overlap right there? Boom. That's a trade. Okay. Oh, fucking now the market's gonna run up here. Ain't that some shit? Did S&P run those low? No. Oh yeah, we are setting up some tomfoolery. I can tell you that. Anyway, who was that? Yinka. That's really all that I don't even need the inverted imbalance, honestly. I like it. It gives it more confluence. It makes me a little bit more comfortable. But if we run liquidity and we have opposing liquidity, yeah, that I'm aiming for that. But like I mentioned, number one, it's an FOMC day. Number two, it's FOMC in the morning. Number three, like trading in the morning rather was shitty. And then this was during lunch. And I haven't traded a live trade in lunch in a long time. Lunch blows. Lunch does this bullshit. It'll get you a good entry and then get out of break even type shit. And that, like lunch, I've never wanted to punch a monitor more than getting stopped out at break even during lunch. You know what I'm saying? Like y'all, you guys have seen those videos or those memes like on FOMC days where people blow their accounts and it shows like their glass desk that's shattered, or they took the TV off the wall and there's like big dents in a TV from people punching it and kicking it. That's what lunch trading does to me. I'm like, oh yeah, sniper entry, about to hit my TP, and then just drifts lower. You get out with like $10. And then you're just like, why am I even a trader? You know what I mean? And then all the irrationality kicks in. But I don't need a lot. You don't need a lot. You can keep it simple, right? The KISS method. Keep it simple. Stupid, right? Keep it simple. Next candle model, smaller time frame entry. Medium time frame stop. Higher time frame target. Small time frame entry. Done. But as we discussed yesterday, is every trade going to be a winner? No. Is every trade, are you going to hit break even sometimes? Yeah. Or are you going to partial and break even sometimes? Yeah. Because there's an imbalance right here, right? Now on the demo, I only traded with one contract, so I'm like hold or fold, so I don't really care. But if that was a real trade, this imbalance, or even this, I don't know if the first one, maybe the second one, if that second imbalance hit, that would be a partial, and then the rest would have been break even. So that would have been like a positive day, but just not a home run. It'd have been like a base hit, and you're just like, all right, whatever. And that's kind of how that would have went. But again, I almost never live trade during lunch because of shit like this. So in other words, I'm going to wait for FOMC in 45 minutes roughly. Or no, sorry, 35 minutes roughly. And then we'll see if we get some sort of manipulation, I'm sure it's likely. The 50 40s, 42, something like that, these lows are identical, right? If we just took everything off here, those are identical. And that's very clean, right? Oh, that's a support level. That's a support level. Look at this. It hit that and rallied. This is a support zone, right? Well, let's long that and then have our stop below here, and FOMC hopefully should, you know, rip it higher. And so there's just this buildup of stops, building up stops. A lot of, well, look at it. Look at, just do this exercise real quick with me here. Look at the chart, okay? And look at every high and low today. Look at every high and low today. And I want you to tell me that people aren't at their trading desk frustrated right now. All right, let's draw this out for a minute. Maybe not every high and low, but some of these important ones we will. Okay. So if traders are getting stopped out at, you know, at all of these spots here, 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 up here, right here, right here, and even that second run here as well, and even there's smaller time frame right there. There's like those two candles right there, like 1 minute probably equal highs right here that got swept to trade lower, and now we just created another like demand zone type shit. A lot of traders are probably getting chopped up. They're like me, taking break evens, which isn't terrible. You know, it's frustrating. It's not awful because you're not losing money, but it is mentally fatiguing, and that's usually not good. And I feel like a lot of traders are going to revenge trade for FOMC today, and they're going to get their face ripped off. Anybody that's been trying to trade this chop has been getting knocked out. Anyone who's been short, I mean, these are all consecutively lower highs, so there's probably a build up above some of these highs. And with this run lower, there might be, if traders have been short all the way lower here, this would probably be the easiest available target. If anybody's been long, or if the market's going to attack liquidity, that's the first and easiest available target. But yeah, so it's, the market is building up a lot of orders right now, especially on ES, especially in the S&P. Those lows are too clean, and anyone who uses zones and shit like that, they're looking at this like demand. And even though you see a rally, 6-7 points, it could even run up and take some of these highs. This I don't believe is going to stay there. I'd honestly be surprised if it does. Like if FOMC just comes in and gives us a whoop and trades higher, I'd be surprised. If we don't come back for that later, meaning, like, here's a scenario, and I'm not trying to say like this is what I think is going to happen, but I'm saying it wouldn't surprise me if we, for FOMC, if we traded higher to clear all the shorts from today, clear all of this shit, and maybe even this up here, right? Get everybody thinking that the low's been set, and then the afternoon, like after that, might rip it lower. I wouldn't be surprised at seeing something like that. Just an ultimate whipsaw type scenario. Or, I don't know, we got 30 minutes left. I mean, or it could run lower again to clear all the stops and then maybe trade to go to the opposing stops up here. So again, it's hard to say. I don't know. I do not know. Earlier this morning, I was looking for longs on Nasdaq because of these small time frame highs up here at 17,529. We never got that. We took a short-term low. I thought we were going to then go up there and take it. We didn't do that. We created equal lows. I'm like, okay, let's wait. We take the equal lows. I'm like, okay, now we can trade into everything I just showed you a couple minutes ago and then go up here, or at least to this high. We didn't get that either. So it's just a day of tomfoolery, you know? Now, to be fair, you know, I'm not angry. I'm not upset. I know it's an FOMC day and the markets are likely to do this type of shit. But I want to trade it anyway. I mean, I don't know what else to tell you. I like challenges. I want a challenge. I want difficult market conditions sometimes. It's not always going to be easy money, dude. Like the euro from last week or whatever week that was. Wicking like 10, 15-minute candles in a row your direction. Easiest money you'll ever make. But that's not going to be on every setup. So hopefully that answers your question. I don't twin traders, I think, who asked that. That means your confluence for that trade was sell side liquidity swept, displacement back into the range, disrespect bearish. I think you meant to say FVG for fair value gap. I just call it an imbalance because overcomplicating is not, I don't like that. Draw on liquidity is the last significant high. I thought it was. I thought it was. Now, if I left it alone and my stop was down here, I'd probably be okay. But I don't, when trades come back below your entry like this, oh God, that more times is going to hit my stop than not. So I don't mind skipping all this bullshit. Even if that trade would have been a winner, I'm not looking at it like that. I'm looking at it like, look, it was a demo trade anyway. It's like, great, fire entry runs to, you know, your TP. It just doesn't get to your TP. It's not a big deal. But what do you think we're going to trade to now that we've seen a lot of downside liquidity swept? What do you think is the easiest target right now? The market can't get to these highs up here without getting to this one here. I know that's obvious. You don't even got to write that down. That's why I said this one is the easiest to get to if it's going to run liquidity on the upside, which obviously I think it's going to do that now. It's definitely late, but I mean, I didn't tell you I was looking for setups here in the first few minutes. The entry I got on there ended up creating these lows here, which got yoinked. Then we traded higher, clearly broke structure, clearly shifted in price delivery, came back down, imbalance right there. I don't know if you guys were watching on a 1 minute. We had it on a 5 minute, I think. Wasn't even watching that on a 1 minute basis. This formation is definitely kind of nasty. But in terms of up candles, there's your highest one. And that is the mitigation model right there. We trade higher, back into these two down candles here, small imbalance right there. This should have no issue trading above 467. On a normal day, on a normal day, this should have no problem trading higher. Let me just briefly look at Dow. You see what I'm saying? Dow just keeps printing higher and higher, despite what the other indices are doing. What do you do with that, dude? You leave it alone, my friend. At least for now. There's that high right there on ES. Right there. What do you think Nasdaq just took? Oh, not yet. Got ahead of myself. There it is. There it is. You laggard. You laggard. Look at that. You want to talk about good trading? That is usually what I like to look for. Obviously, I didn't trade that, or we didn't watch this on a 1 minute time frame, but that's what that looks like. Liquidity run again in a very ugly, in a very just manner that makes you want to punch a monitor. It's just very gross. That's all. And then you get your indication, like, okay, now I'm ready. I'm gonna get everybody out. I'm gonna do this bullshit one more time. Okay, now I'm gonna run. Do you understand how that works? Do you understand how markets work? Before they go higher, they're gonna go lower first. Almost inevitably. Almost always. Not every time, but almost always it's gonna do that. It's gonna run liquidity. It's gonna get you the fuck out. The market does not want you here. You are not supposed to be here. You're supposed to be on this YouTube channel, yes. But the markets don't want you there. That's why smart money longs into that. This down movement, they're longing this. Okay? Then these retracements allow for them to get out of those shorts and load up on longs. Load up on longs. Whoop. What did I say earlier about S&P? Or no, that was on Nasdaq. I'm sorry. Or fuck, it might have been both. I said we had a high, a lower high, a lower high, and a lower high. And the market's been lower for a while. So where do the stops get jammed to? Right there. And on a 1 minute time frame, we pretty much ran straight there. That is easy trading right here. I'm literally giving you things to study, things to back test. This right here is a mitigation model. It's not my mitigation model. It's just the markets operate in a function to help smart money mitigate their orders, their positions that are negative. And that's why it's a mitigation model. And this is what that looks like. You're getting in at a decent price after 2 liquidity runs, not 1, but 2. Right? Again, that 5 minute, look at this 5 minute time frame. It goes down there and then closes and then turns around. What type of shit is that? What type of shit is that? So that looks gross, but on a 1 minute time frame, it does look a lot better. So that right there, easy scalps. Easy, easy. And then you know what? You go, okay, if you're going to trade on FOMC days, which I don't recommend, but if you were to, that would be it right there. And you could be done and walk away. In or in late, out, walk away. Anyway, I don't know how we got here. I don't know if I was trying to answer your question or what. I'm sorry. I always veer off into whatever it is I want to do. But that's the idea. What's the easiest target? What's the most obvious setup? What is clear and obvious? And this is why we ask ourselves, has liquidity been ran? Yes. Is there opposing liquidity? Yes. Are we going to long below the lows? You can. That's the Y slime model. I didn't want to do that. But every price run, okay? Every price run has multiple opportunities. Do you understand that? Lows, opportunity number one. This, or, well, actually this one. That fractal high right there is traded through here. That mitigation, meaning this orange box here, that could be an opportunity. Or, as I teach with the mitigation model, the imbalance overlap, that can be an opportunity. These two down candles, they get traded through and traded back into. So that could be an opportunity. Small imbalance there too. So there's 1, 2, 3 opportunities in this particular leg of price, meaning this. That's what I mean by price run, like a price leg. From the manipulation down to, or excuse me, from the liquidity down here up to the liquidity here. You have to study all of the things that are in between that. Okay? Where is 12? 12 is here. So that's a little bit above the 12 o'clock open. So you're not getting below the session open, but you got liquidity that was ran below PM session open, and that's fine. So easy trades in here. Now look how quickly, let's delete everything because this is messy. Look how quickly that high has been given up. That's kind of a horrible line, isn't it? We trade into that and then immediately off of it. Right? What about S&P? Similar story. That short-term high, grabbed it. We're back in the range. Tough day. It's a tough day for sustained positions, meaning if you're looking for sustained moves, usually not going to happen. Now, obviously in the Dow, you know, if you traded this morning and you held a piece on, yeah, Dow's been in your favor all day. Right. But a more popular market, I'm assuming, is S&P. That hasn't done anything sustained. It's all back and forth. Give and take, give and take, give and take. Same thing with Nasdaq. Give and take, give and take, give and take, give and take. So that's why I'm talking about scalps here on that smaller time frame. Okay? And, you know, the markets don't have to be that difficult. So liquidity to liquidity, imbalance to imbalance, imbalance to liquidity, and liquidity to imbalance. There's only like 4 things. Well, at least what, because liquidity sets the highs and lows. Imbalances are in between. But imbalances can create short-term highs and stuff like that. But it's time frame dependent. Anyway, don't let me confuse you. Those 4 things: liquidity to liquidity, imbalance to imbalance, liquidity to imbalance, and my favorite, imbalance to liquidity. So we still got about 15 minutes left before the federal funds rate. And 30 minutes after that will be the FOMC statement. So I think it was Sean who asked if I was going to stream through the FOMC statement. I think we can do it, but we might take a small break. I don't know. We'll play it by ear. Let's take a vote. We haven't done a vote in a while. Okay. So there's your question of the day. Do you guys want to stay here? Do you want me to stream through the press conference, or do you typically want to you know, just hop off at 1 and then you can watch it on your own? Let me know. Let me know. All right, so now that we have spent quite a bit of time on the indices, let's take a brief, let's go back to what I opened up with today on the dollar index. So 106.50s up to almost 107. That gap is still here. That gap is still there. We have respected this daily imbalance rather sloppily. So we could see a run into that, or we could leave that open, have these as low resistant highs for a later date. I think that could be a possibility. If we left these highs how they are right there, that could probably set up for low resistant highs in the future. With this on the dollar, we'll take a look at the euro. I don't know what the euro is going to do, bro. I don't know. We still have this huge imbalance up here. We could get into that. I don't know if we're going to do that today, but I personally don't have anything all too clear to me. What is that even drawn from? Anyway, there's a gap on the weekly time frame. We traded into that today. Down here, right before London. And I don't know what this is going to do. I have no idea. Oh, God. Look at British pound. Look at this. Imagine trading that. Imagine trading British pound today. Ugh. Wow. Are we seeing the same chart right now, dude? Pull up your British pound on a 5-minute and look at this. Horrible. Horrendous. Absolutely horrendous. 124.77 or 78 has a lot of clean lows here. I would be mindful of that. I'd be pretty mindful of that. I'm not saying to trade it. Let's get all these disclaimers and shit out of the way, because I don't want you guys thinking that I'm telling you to take a trade, because I'm absolutely not doing that. 106.70 is small time frame lows on euro. So, and probably some liquidity over here too. So on an intraday basis, could see a spike lower into that. That's only like 10 pips away, right? Yeah, that's not really something to be super excited about, but it's there. I think I missed that question. Would you enter on short-term liquidity being ran and then the next entry confirmation that appears? So what about when it comes to no liquidity being taken out and you're looking for a continuation, if there's not a liquidity run, then there's probably not going to be a trade. Unless you're buying below an old low on like a much higher time frame, like on euro, for example, buying down here or buying into this on the way lower because it's that weekly gap. But I don't know. Why would you not wait for it to trade higher and then back into these up candles here? Right? So it's like trading into this mitigation, trading back into that weekly gap. You know, I mean, it's weak, but you know, that to me is a much better way of doing things, is waiting for liquidity to be run and then one of the next retracement as opportunities is what I would look for. What's good, Alex C? Days like today, eat the impatient. Yes, people like me, who unfortunately, you know, most people aren't very stoic. They are not very disciplined. I'm not the most disciplined person either, but when it comes to certain things, I have my line in the sand. So, but anyway, I've been doing this a long time, and you know, I've been reading and studying Stoic philosophy for like maybe 3 years now. So there's a lot of things that just don't bother me anymore. You know, like being cut off in traffic, or some old lady at the grocery store checking out slow as fuck. Like, it doesn't even bother me anymore, you know? So when you understand time, price, and context, you probably won't be bothered as much either. Like if you trade today and you get your face ripped off, you know, you're going to remember that for a long time. And then not trading on FOMC days is not going to bother you anymore. Oh, well, you know, I want to be a trader, so let's take trades. It's like, that's not the right idea. You want to take high probability trades, not just willy-nilly trading everything or anything. You got to wait for high probability setups. And that's going to occur at the right time, at the right price, with the right context. Okay? What's good, JG? Saw your stream after a long time. Well, welcome back. You can get that sniper badge at any time. If you click the join button, become part of our community and join the Discord. It's very cheap. It's only $25 a month. And you'll have access to videos that the public doesn't have access to. So you can do that too. Look at that, marketing 101. You don't mind a small break? You guys can take a break now and come back, and I don't know how long you need, but we have about 5 minutes until death to over leverage trading accounts. So if you want to take a break now, go ahead. I mean, you're not going to miss much in 5 minutes. You know, if you got to use the bathroom, microwave something or whatever. I already got my drink next to me. It's a sparkling ice. So I don't know how healthy these are, but it's not soda at least. Thank you, EDA. Appreciate that. I do what I can for the people. You know what I mean? I do what I can for everybody. Not everything is behind a paywall. Some things, not everything. So, man, I want to keep an eye on everything. I can only stream one monitor at a time. Just remind me to come back to this. So if I don't cycle through these, just remind me. So we have lows on euro, Lows on all these lows on British pound. I'm not worried about the other currencies. I'm not trying to keep up with every fucking thing. So, yeah, just remind me if I don't get to it. And we're going to do this too. I just want to have those lows on the chart for ES. And I want to have these highs for Nasdaq. I know that's weird, right? We have a downside target for S&P, but we have a very, very small time frame set of highs that could potentially, we could see that run up here too. Look, I don't print these candles, bro. I'm not the one that's, you know, going over here and manipulating markets and all that shit. I'm just telling you what I see and what I'm looking at. And right now I'm looking at a whole lot of fuckery fixing to happen. Yeah, like smoke them if you got them. I mean, it takes more than 5 minutes to smoke. I mean, if you want to hit the bowl, that's a lot quicker. But hey, to each their own. I mean, it's what I've heard, you know, that bowls are quicker. All right, 2 minutes, and we have FOMC, and then Powell speaks about 30 minutes after that. So if you guys want to take a nap, you're more than welcome to listen to Powell speak. I hope that I don't put you to sleep with, you know, the lessons and the commentary, but I know that time and time again, I've tried to listen to Powell and I just get so sleepy and lethargic. It's like, I'm not working out today. I'm being productive from listening to Powell, knowing that doesn't really do shit. So, what'd you guys vote for? How many votes did we get? 38 votes. 95% of you said to stream through the press conference. Okay, I guess we will. I guess we will. I mean, I could take a nap, but I guess we'll be here. That's fine with me, chat. All right, so remember, I'm not telling you to take a trade. I'm not telling you to take a trade. I think if we get something high probability after later in the afternoon, I think that might be okay. But going into this, I am absolutely not taking a trade. All I have is the stocks I currently own, and that's it. I'm not in any options. I'm not in any futures trades that I know of. Okay. So it just spiked above that high. We're seeing some whipsaw here. You see how price is skipping too? It goes from 75 to 70. It's skipping price levels. This is why your stop loss will not be respected. And that's why I put that on my Instagram story earlier. There's a picture of the thumbnail with saying, you know, fuck your stop loss, because that's what's fixing to happen. There's a lot of people fixing to get liquidated. Remember, where's the liquidity? Where is the liquidity? Damn, that's a lot for 1 minute too. We've only been here a minute. If we go to a 1 minute candlestick, it's the same. It's the fucking same as the 5 minute. when the 1 minute is the 5 minute, you know? So let's see real quick. So we spiked. Well, I'm gonna just borrow that one and this one. I don't think we quite got to that up here. So anyone who bought this high or bought above that, they're feeling pain right now. Because they just bought on the way up and the market's just ripped like 50, no, like 30, 35 points or something. Let me just check Dow as well. It also spiked higher. Jesus. ES. What did we clear on ES? All of it. We cleared that. We cleared that. And we cleared opening equities open high. We just cleared all of that. I'm not saying it's a reversal. I'm just saying look what we traded into. Because honestly, I'm pretty certain we talked about this high is what I would have wanted to see. Remember that drawing I did earlier? How if we came all the way up and cleared all this and then went lower, that was like the only scenario I drew out. Not bad. But we stopped short of that by like a point or two. So yeah, look at those 1 minute candles, man. All the way up, all the way back down. A little bit of up movement, coming back a little bit. Small time frame lows right there too. Let's take a brief look at the currencies. See what they did. Wow. Wow. What a fucking joke. Look at that. You cannot be serious. Equal lows, now triple lows. British pound went higher as well. So that means dollar went lower. Interesting. Interesting. There's 65.5. I think it needs to get above that, though. It wouldn't make sense to just hit that. It would need to trade up and through it. Ah, like that. Like that. Leaving these lows behind. What about Nasdaq? Oh. No. It didn't. Didn't do that. Uh, 17,457. That's just very small time frame lows. So basically at the open of FOMC is what I meant by that. So if traders are long or gyrating in here trying to go long, that's going to be looked at as intraday support, and that might be a level for stops as well. So yeah, both of these went higher on a 1 minute basis. Dow left equal highs on a 1 minute basis. Interesting, chat. Very, very interesting. Oh, and we have that same phenomenon on S&P too. We kind of snuck in there. Let me ask you this, for those of you that are here. Are you guys still here? Matter of fact, drop a 1 if you guys are still with me so far. Drop a 1 if you guys are still here. All right, great. Cool, cool, cool. How would you feel right now if you were long? If you were long right now, how would you feel? Would you feel great? Would you feel great? Or would you be nervous? Oh. 2020 is going to be shit and pancakes. Maxim wouldn't feel good. Why wouldn't you feel good? Revan says impartial. Naruto would be nervous. Nikki would be nervous. Yeah, I could see that. I'd be nervous. I'd be nervous too. Because there's this lingering level of liquidity. And everybody's praying that they don't get stopped out. They're just praying that they don't get stopped out. I just wish the 1 minute wasn't so like this. You know what I mean? I wish it wasn't like that. Revan, like the rock that the waves crash and fall still around. Marcus Aurelius. How do I add YMM 2024 to my watch list? It doesn't appear to me. It's going to be under the futures, or you can just type it in and press enter, and it'll do it. Just type it in. YMM 2024. Hit the space bar. I mean, hit the enter bar, sorry. Bull flag? I don't think I see a bull flag here, but I would say most people don't watch a 15-second time frame either, but it's just the one, like, just look at the 1 minute, bro. This looks fucking horrible. But we came up, we took a few levels of liquidity, same on ES, and anyone who has been long is probably clenching their cheeks going, don't stop me out. Don't get me break even. And I think that's exactly what the market's going to do. It's going to come back for your stop. Why what, Nikki? You weren't along since 10:30 and you're green now? Jesus. You were long on what? Uh-oh. Look at that spike. What's it spiking towards? What's it spiking towards, man? S&P, same shit. They're going, oh no. Oh no. My demand zone. Don't hit my stop. Oh, on NQ? Oh, damn. No. Not my stop loss. No. Don't get me. Smash my TP and I'm already out. Oh, nice job. Very nice. It's only been 12 minutes since the announcement at 1 o'clock. Right here. So if you ever want to just add that, like, as a line saying this is when it started, you could do that. Great job, Primer. Wonderful job. Would you say at the beginning you were bearish on Euro? Bearish on Euro. Yeah, you did say that. Let's go briefly take a look at that, because the indices are still gyrating. Still with a high level of volatility. Look at that, it came close though. Back into the range. All right, let's see. The Euro. Well, the Euro fucking rallied though. And left this. Oh, look what we took. British pound. Wait a minute. Oh, never mind. Never mind. That is a very clean level of price down here. That's so clean, it's ridiculous. Yeah, so that was New York's high. New York high taken. Open liquidity down here. Maxim, I haven't even looked at that cross pair. I'll look at that cross pair usually if I trade Euro or British pound. But I haven't looked at that in, I don't know, like a week or two. It's been a while since I've even looked at that. Dollar 1 hour traded down 106.10. Small imbalance there on the 1 hour. All right, let me go back to indices. I need to watch the indices. Because you know what I'm thinking now at this point? Since we didn't run these here, the only reason I think we might not is because of Dow having these highs up here. So the Dow may still want to extend up for that. And that might be problematic for ES and NQ. But if these prove weak, like if Dow trades up here and grabs that, and the other two don't, the other two stay in a range or maybe trade a little bit higher, and then they just prove weakness, that would make me excited for 17,457 for NQ and the 50-50 level probably for ES. But again, I would just keep waiting a little bit. Powell doesn't even speak until about a little bit less than 15 minutes from now. So that could, like, I don't think we're going to make the entire range, just in the first 15, 20 minutes. Like, we don't have to do that. So we can still see the extended volatility the rest of the day. But yeah, so let me talk to you real quick, because I know a lot of you are still here and hopefully taking notes. So I touched on this earlier. Just because, let me clip this actually, now that I think about it. So just because you trade, or let's say don't trade, okay? Let's say you might not be in this market. Like I'm not. I'm not in ES. I'm not long or short, other than stocks I already have, whatever. But I'm saying on an intraday basis, you have to look at it from both perspectives, meaning, can you frame a long? Can you frame a short? If you can justify both long and short, probably not a good trade. It could go either way, like a coin flip. In trading, high probability comes from a heavy one-sidedness, meaning one, or let's say like buy side, let's say you want to be long, and longs get stopped out, and then there's liquidity on the upside still. Once longs have been cleared out, like with what we saw on Nasdaq earlier today on the session, right? The market came down here, cleared these lows. I mentioned all of these highs up here, all of them, right? As a potential upside. So once the liquidity's been taken, now, we find high probability setups to go higher. It's the same idea. Well, pretty much for every trade that I take, I'm trying to justify both sides. Can I justify longs here? Fuck no. High here, swept. I wish we would have traded up here, because that's that level from way back way up here. This is equal highs up here. Okay. So I don't want to long because we have lows here. I don't want to short entirely yet because we have the highs up here. So right now, I think we could go either way. Although I'd still probably rather have the lows, because the market's been trading higher since the liquidity run during lunch. So trailing stops might be down here. That could frame a short. But because we have, this might confuse you. Let me take all this off, except for the two levels that haven't been met yet. Or that haven't been met, rather, I should say. Okay, now do you see what I'm talking about? The market could go up here. It could trade down here. And right now, we're within both of these targets. So to frame something that is considered high probability is difficult. It's difficult. That's why I said I wish we would have traded up here, because that would have ran up, cleared this, and then had it shown a willingness to go lower, it would likely trade down here, and then we could look for shorts on a rally to go lower. Does that make sense? So with all of these scenarios, meaning like the future side, meaning the index futures, the currency side, it's all the same. Can I justify both sides, or can I justify only one side? And when there's heavy one-sidedness, that's when really good trades take place. Okay? S&P, I can't even zoom out that far. The S&P did rally above the high that I wanted to see on Nasdaq. And it cleared out all of these highs as well. So I still think this could trade lower. I still think it could. But I don't think it's going to be allowed to do that yet. I think the Dow needs to trade up here first. And then it will have permission to do so. Does that make sense? I hopefully I'm not too complicated, or I know I'm switching charts left and right, but if you weren't here, I'd be doing this way faster. But I'm trying to explain my thought process of watching these markets and, you know, seeing what's taking place and trying to give you an idea of what I think could happen. You guys good with that? So 38,166 for Dow is equal highs, very clean. If we get up there and above this, I would want to see if Nasdaq is doing something similar. I would want to see if ES is doing something similar, or, as I mentioned, if they are weak, that would just make me even more excited to short a weaker market to go below these lows. And then remember, that's just a small time frame. The higher time frame might suggest the 50-42 level and below. Okay. So basically what I'm saying is I don't think anything is going to happen until Dow clears this. And we're pulling up on Powell speaking in about 7 minutes or so. So this to me has to get ran before we see downside on any of them. And I'll clip that there so we don't make this clip as long as the live stream is. But yeah, that's kind of cool, right? Are you having fun? Drop a 2 if you guys are having fun, or if I'm just boring. If I'm boring, just let me know. John, I don't learn anything. All I do is blow my account. I don't even like your stream. I don't even want to get up to click the like button. I hate you. Well, thanks, Nikki. Banned. Who else thinks I'm boring? That's what I need. That's what I need. I need to go on Amazon. I need to get one of those Judge hammers. I bet you Amazon has it too. Stand by. Or the gavel. Is that what it's called? Premium wooden gavel and block. Perfect for judge, lawyer, auction court, company, student. $13.99. Free delivery tomorrow. You guys are getting fucking banned. You guys are getting banned. Got to put in my save for later, so you don't see what's in my cart. I want to show you what's in my cart. Look at that. Equal highs taken on down. Beautiful. Absolutely beautiful. I'm over here trying to fuck around. Look at this. Look at that. Premium wooden gavel. You guys about to get banned. All of you. I gotta order that. I'm ordering that when this stream's over. That's what I'm gonna do. That's what I'm gonna do. All right, ES, or matter of fact, Nasdaq, let's see if she's above. Let's see if she can get up here. Let's see if she can get up here. The 15,529 level. She's got to get there, bro. She's got to do it. I wanted that early this morning. I got stopped out like 17 zillion times. What a bitch, bro. What an absolute bitch. I quit, chat. I quit. This is stupid. Never trading again. Liquidity sweat. Imbalance. Deep retracement. FOMC did some dilly-dally, but inevitably launched us up here. Right? Did we not talk about each... Oops. Man, fuck that. Did we not talk about each of these highs here being liquidity? And did we not talk about that level up there? Boom. We got there very horribly, but we still got there. Imagine trading that and then holding a piece, because this, again, I said was TP, right? Imagine holding one for that longer term target. So now all of them got to be higher. Dow, oh my God, definitely cleared the highs by far. ES did the same. NQ following suit. So they all did the same. So now what do you do with that? And then Pal's going to speak here in a few minutes. The only way I would short this market, because right now, not that I'm trying to be too egotistical here, but this is exactly what we outlined earlier, did we not? I said if we run higher, clear up all this, if we get a convicting move lower, I would look to short. And right now, I think the day is still in alignment with that. Even though it's printing massive up candles. If Powell speaks and we end up getting continued volatility and we run lower, I would look for a run below those lows. If we don't get that, if we just continue higher, I'm not going to trade anything and just leave it alone. Make sense? I'm not wearing no fucking robe. That'd be kind of cool though. So you might be onto something there. Euro back into the range. Into that previous high. Back up. British pound, same thing. Higher. Still leaving these higher levels of liquidity. So. All right. Does anybody have the link to the Powell speech? Does anybody have it? Actually, I'm going to watch S&P. That's what I'll do. Yeah, Sean, the judge's wig. That's what I really needed. That'd make for a good thumbnail. I might have to do that. Although with the beard, I'm not sure how that's going to work. Unless I get the beard one too. Look like one of the founding fathers or some shit. Yeah, all rise. Honorable Judge John Fibonacci in the courtroom. I said order. Hold you all in contempt. Be like the stream or face contempt. That's how we roll. All right, so 130 has started, which means I'm pretty sure he's rolling up right now. Not rolling up, but I mean getting to the podium is what I think he's doing. Oh, fuck. Look at that candle. Look at that candle, chat. Jesus. Jesus, Lord, have mercy. Lord, have mercy, bro. That is some funny shit.
Unchanged, and to continue to reduce our securities holdings, though at a slower pace. Our restrictive stance of monetary policy has been putting downward pressure on economic activity and inflation, and the risks to achieving our employment and inflation goals have moved toward better balance over the past year. However, in recent months, inflation has shown a lack of further progress toward our 2% objective, and we remain highly attentive to inflation risks. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.6% in the first quarter, private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand.
Can you guys hear that,
was
right?
3.1% in the first quarter, as strong as the second half of 2023. Consumer spending has been robust over the past several quarters, even as high interest rates have weighed on housing and equipment investment. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. The labor market remains relatively tight, but supply and demand conditions have come into better balance. Payroll job gains averaged 276,000 jobs per month in the first quarter, while the unemployment rate remains low at 3.8%. Strong job creation over the past year has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years, and a continued strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed, but labor demand still exceeds the supply of available workers. Inflation has eased notably over the past year, but remains above our longer-run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The inflation data received so far this year have been higher than expected.
Never mind.
Although some measures of short-term inflation expectations have increased in recent months, longer-term inflation expectations appear to remain well anchored,
Look at that higher high.
as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are strongly committed to returning inflation to our 2% objective. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing.
All right, real quick. I'm saying higher high on ES here. Look at NQ. Not making that higher high. That looks like weakness. So I would probably be interested in ES shorts. Holy shit. Oh my God, chat. This is a 15-second time frame. Look at this volatility. Where are we going? Oh my, what the fuck? Where's Powell? Pull him up.
So far this year, the data have not given us that greater confidence. In particular, and as I noted earlier, readings on inflation have come in above expectations. It is likely that gaining such greater confidence will take longer than previously expected. We are prepared to maintain the current target range for the federal funds rate for as long as appropriate. We're also prepared to respond to an unexpected weakening in the labor market. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We will continue to make decisions meeting by meeting. Turning to our balance sheet, the committee decided at today's meeting to slow the pace of decline in our securities holdings, consistent with the plans we released previously. Specifically, the cap on Treasury redemptions will be lowered from the current $60 billion per month to $25 billion per month as of June 1. Consistent with the committee's intention to hold primarily Treasury securities in the longer run, we're leaving the cap on agency securities unchanged per month, and we will reinvest any proceeds in excess of this cap in Treasury securities. With principal payments on agency securities currently running at about $15 billion per month, total portfolio runoff will amount to roughly $40 billion per month. The decision to slow the pace of runoff does not mean that our balance sheet will ultimately shrink by less than it would otherwise, but rather allows us to approach its ultimate level more gradually. In particular, slowing the pace of runoff will help ensure a smooth transition, reducing the possibility that money markets experience stress and thereby facilitating the ongoing decline in our securities holdings that are consistent with reaching the appropriate level of ample reserves. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you. Howard Schneider with Reuters. A question to follow up, if I could. Do you consider the current policy rate still, are you confident that it's sufficiently restrictive to get inflation back to 2%?
So I do think the evidence shows, pretty clearly that policy is restrictive and is weighing on demand. And there are a few places I would point to for that. You can start with the labor market. So demand is still strong, the demand side of the labor market in particular. But it's cooled from its extremely high level of a couple of years ago. And you see that in job openings. You saw more evidence of that today in the JOLTS report, as you'll know. It's still higher than pre-pandemic, but it has been coming down both in the Indeed report and in the JOLTS report. That's demand cooling. The same is true of quits and hiring rates, which have essentially normalized. I also we look at surveys of workers and, surveys of workers and businesses and ask workers, are jobs plentiful, and ask businesses, are workers plentiful? Is it easy to find workers? And you've seen that the answers to those have come back down to pre-pandemic levels. You also see in interest-sensitive spending like housing and investment, you also see that higher interest rates are weighing on those activities. So I do think it's clear that that policy is restrictive.
Sufficiently restrictive, I guess.
So I would say that we believe it is restrictive, and we believe over time it will be sufficiently restrictive. That will be a question that, that the data will have to answer.
So as a follow-up, if inflation
Pardon me.
continues running roughly sideways as it has been, the job market stays reasonably strong, unemployment low, and expectations are anchored and maintained, would you disrupt that for...
Expectations are not anchored?
Or anchored.
Or anchored.
Stable, roughly. Would you disrupt that for the last half point on PCE?
I don't want to get into complicated hypotheticals, but I would say that, we're committed to retaining our current restrictive stance of policy for as long as is appropriate, and we'll do that.
Gina. Thanks for taking our questions, Chair Powell. I wonder, obviously Michelle Bowman has been saying that there is a risk that rates may need to increase further, although it's not her baseline outlook. I wonder if you see that as a risk as well, and if so, what change in conditions would merit considering raising rates at this point?
All right, real quick, somebody get this fucking guy a drink. It's like real talk, bro. Anyway, what I was looking for in here, because remember I said this earlier, I'm looking for an imbalance on the way lower. We never got one. I was in the 15-second here. I'm trying to see if there was anything in here worth shorting. There's like a small gap, but there's nothing that was very profound and left open on the upside after this made a higher high. Even on the 1 minute, right? It prints low all the way down here, comes back up, and then this candle comes back up into this. And so there was no imbalance on a 1 minute, and there wasn't really a whole lot on the 15-second either. So although it looked like it was getting ready to yoink that, it never did. And so I'm just trying to pause here for a moment to let you know what I'm looking at. And at this point, we might not run these lows. I don't know. But we just rallied like about 50 points above where we started from the FOMC release. So to me, I don't think I'm going to trade today. Again, I wanted to see if we'd clear liquidity, trade lower, and then, you know, create something on the way down. And we didn't really get that. The 130 candle does spike down here, and at least behind a big imbalance, that gets traded into, and it does trade off of it. So it gave you an, like if you shorted, I guess, this imbalance, it gave you an opportunity, but it doesn't run the lows, and it comes right back up, and it probably would have stopped you out if you were short. But again, I haven't seen anything that I would want to short. I was trying to point out the lower high in here and that higher high on ES. I thought that would set our high, but again, we needed that imbalance created on the way to the lows, and we didn't get one. So this might just take off. I mean, it's taken off. So, you know, I can't really do anything with that as far as today goes. So yesterday we didn't really have any wick on the Tuesday candle. That might be an upside for today or tomorrow. NQ, it's fine. NQ still has this high below this imbalance here. I still think that could be easy upside, but I'll let you guys go listen to him talk if you want to, but I can't handle it, bro. I'm sorry. It's just his tone of voice, and he repeats the same shit over and over again. So I won't do it anymore. Let's take one more look at currencies. Let's just see what's going on over there in the euro and British pound. Ooh. Took the high, same thing. To see if we come down, leave anything behind. On a 5 minute, not really. On a 1 minute, we didn't really leave too much either. I mean, small imbalance, but that got traded through immediately. So these lows might be open for a later date for the euro as well as British pound. So, hey, I told you I'd be surprised if we left that open. I'm fairly surprised. I'm shocked. I don't know why we'd leave that. But listen, if this week hasn't shown you the human side to trading, meaning you could have a bias and get it wrong. You can, I mean, I'm not going to say like I called this market to the T. I didn't. But we were looking at least for liquidity on the upside to be ran. And we did get that to a degree. I don't know how confident I would be to see us come all the way back down here today. I don't know. It's a possibility, but I think if I had to make a decision right now, all right, John, are you going to trade today or are you going to walk away? I think walking away is the answer. I think walking away is the answer. And some of you might not want to hear that, but that's the decision. I'm sticking with it. On demo, you do whatever you want to do. Paper, do whatever you want to do. I think I'm going to take the rest of, well, the trading day at least. I'm probably going to go outside and read some of Mastery by Robert Greene. So that is going to cover it for today's stream. So, I mean, I threw in some lessons here and there. Hopefully you did learn something, or at least got a refresher on something. But hey, you can look for setups and not get one, right? Looked for a clean level of liquidity. Market said, all right, John, I see you streaming over there. Fuck you. Whoop. Prints up candles. I don't make the rules, buddy. I don't. I just try to interpret the best way that I can. If volatility continues, don't be surprised if we come down here. Meaning, again, if volatility continues, but I just don't know. Okay? So with that, drop a like on the stream if you haven't got one already. Or if you didn't drop one already. Y'all be good, man. I'll put out tomorrow's market review tomorrow. It is the first day of the month. Brand new month as well. So keep that in the back of your mind as well. All right. So we'll be here same time, same place, same price on Friday right here on YouTube. Totally for free.